Hi, this is Devin Hobb, and we are standing in a home that I'm about to buy as I answer the question, will the Utah housing market crash? So let's dive into a couple of market stats, and we're gonna end with why I decided to continue to move forward with buying a home anyways. All right guys, to answer the question, will the market crash in Utah? There's a lot of information that goes behind that. And so rather than me just share my short answer opinion, I provided the facts and information for you to also formulate your opinion. So anyway, I hope you make it to the end of the video, and I do believe if you get 2 to 3 minutes in, you're not gonna wanna stop. So go ahead and continue on with the video, and if the content is good, like the button. That helps with the YouTube algorithm, and subscribe to our channel for future updates. Continue on with the video. All right, so on the screen, what we're looking at is the orange line represents the amount of showings that we've had this year on the listings for sale nationally versus the blue line of last year's. So you'll notice back in March when the virus became a big deal, the showings immediately tanked and fell almost 50% through mid-March to mid-April, and since then have been recovering. And so the orange line again is this year, and we are up 25% as of the date we're filming in October 2020. We're up 25% on showings over last year. This graph represents the active listings per day. Now, I'm a realtor in Utah, so this is going to be specific information that I had in Utah. The national trends are very similar though. In Utah, we've got roughly, basically, I think it's a 60% decrease. You know, last year there was 10,000 listings for sale in October, and this year we only have 4,000. So we've lost 6,000 sellers this year, which means supply is very low. On this slide, you're seeing the blue line go down, down, down. That's the amount of sellers that are on the market compared to the last 4 years. So again, we're seeing very low supply. Why is that? Probably because sellers are choosing to just stay still. Let's just see what happens. Will the market crash? Well, actually, if they were gonna crash, they'd probably wanna sell. But anyway, I'm not sure why they're standing still other than just all the uncertainty in the air. So what does that mean for buyers? This slide represents the amount of listings that went under contract. And so what we're gonna see is we're comparing the last week versus this same week in 2019. And so you'll see here on the right-hand side under October 13, 2,325 listings went under contract this day last year versus on the right-hand side, 3,074 this year in Salt Lake County. Now in Utah County, we've had 1,796 listings go under contract this day last year versus 3,100 this year. So Utah County has seen a 73% increase in homes put under contract, whereas Salt Lake has seen 32% increase this same day over, compared to last year. So we're seeing incredible demand with incredibly low supply. That means prices go up. And so this graph is showing you the last 4 years of the amount of homes actually closed, sold. And so you'll see, you can pause the video and look at this longer, but I'm gonna just show you 2019 to 2020, the far right 2 columns. And let's just take a look at September, our most recent indicator. Last year in September, there was 4,168 total homes closed. This year, 5,185. So we've seen roughly a 24% increase in homes actually closed. And that's all of Utah. So Utah County, I didn't do the stats specifically for that, but I'm sure it's even higher. Under contract listings and then canceled, going back on the market. So let me say that again. If a buyer goes under contract on the home, they may get cold feet and cancel, or they might get a finance problem or find too many things wrong with the house and they just wanna pull out. And so that listing goes back to active on the market. You'll see in March, there was a major spike, and the listing inventory, well, the buyers canceled almost at double the rate in March when Corona was setting on and fear and panic was starting to happen. And then you'll see that for the rest of the year, it stayed pretty even. There isn't expression of hesitancy in the amount of people canceling once they go under contract at this point. the sold home stats, July to September last year versus this year. They're showing last year, you'll see that in the middle, on average, the negotiations were giving up 1 to 2 to 3%. So a buyer could come in a little lower and get the price down. Now this year, we're averaging 101%. So homes that are listed are selling above the list price. And on the far right, last year, the homes sold between 23 and 32 days on the market, and now they're selling between 9 and 15 days. So our time on market's cut in half, our pricing is going up, there's multiple offers on everything, and that's what's happening right now in the market. So this graph's a big mess, but the important part of this graph is the green line. The green line shows how many sellers listed their home, and the big spike in the middle was in 2007. And so home prices didn't actually start falling until 2008, but what preceded that was double the inventory. So what's interesting is in this Corona environment, we've had the exact opposite thing happen, where we've cut our inventory in half. And so I don't think the indicators that we have right now aren't representing pricing coming down. And you'll see the blue line is the pricing, that's the median sold home price. And so we're far past our last peak. It appears that we will continue to go strong. So our median home price today is $375,000, and the black line is representing the amount of buyers that are in the market buying. And you'll see that again in 2007 it peaked, and then buyers started to decline. At the same rate, sellers decided to put their homes up for sale so they could sense something's going on. And what's interesting is you'll see that the pricing was at peak pricing when they all chose to stop buying and chose to list. Pricing hadn't yet fell. And so they kind of felt it coming. And so I like to see when are the sellers going to double? When are they going to start increasing? And we're not seeing that right now. We're doing the exact opposite. Why is that happening? I believe people really do believe in Utah's growth trend. We've been in the top 1 to 2 ranked states for percentage of growth for basically since the last recession. We've just been shining and growing very quick. You'll see in green, these are the counties that are growing the fastest. Utah County is growing at a 22% rate year over year. I believe with Utah's growth trend continuing to happen, right now we also have a lot of growth because all the political nonsense going on around the country, and with the ability to work from anywhere, a lot of people are choosing a more conservative lifestyle, and Utah is conducive to that. National home price changed in the last 5 recessions. So it is no doubt we're definitely experiencing a recession right now. It's just not being expressed yet in real estate. You'll see here in 1980 there was a recession. In 1981 there was a recession. 91, the 2001 dot-com bubble, and then in 2008. It was the 2008 recession that real estate was really at fault for driving. There was a lot of bad loans issued, a lot of buyers that were in the market that didn't really qualify according to today's standards, and there was 2 million more transactions on average every year with those loose loan guidelines, creating crazy demand. And that hasn't happened throughout the recovery since 2010. We've been recovering, and we actually haven't gotten back to 7 million real estate transactions a year. We hover around 5, which is a healthy number. It was just right before the crash of real estate that we left the 5 million transaction mark and went to 7 due to crazy signature loans and things like that. So, if you're gonna ask me, will the market crash? My opinion would be based off of unemployment indicators and interest rates. I think if it's going to crash, it's going to be because of big unemployment numbers and/or higher interest rates. So let's talk about what happens with unemployment, because obviously we've had unemployment this year in 2020. At first, with the pandemic, we had an initial spike nationally of 15% unemployment, and that was worse than in 2008. Yet, real estate didn't get affected. And so, how much unemployment is it really going to take to bring the amount of real estate transactions down? Because again, that represents the demand. And you'd have to go back to the Great the Depression, actually. In 1929 to 1933, there was a real estate crash then, when the unemployment rate was basically 25%. And so that's the last time real estate fell directly because of unemployment, and also even that depression had a lot more things going on. But you'll see in 2008 to 2013, we had half the unemployment we initially had this time around, and real estate was still going strong. Now, good news for Utah. Our unemployment rate as of August 2020, according to the utah.jobs.gov website, it was only 4.1% unemployed. That's actually pretty good. And nationally, we are now at 8.4%. So nationally, we're about where it was in the previous recession. Real estate's obviously hot. So unemployment is not a direct indicator of what direction our price is going to go, unless we see it in an extreme way. This graph just shows that same thing. You can pause the video and study it, but it's just, actually the blue graph, the blue bars are important to note. You'll see that they hit 7 million. Those are the transactions. Those are the real estate transactions sold, and we never got out of hand during this last recovery period that we've had, because loan restrictions are actually pretty tight. And so you got qualified buyers buying houses. All right, so affordability. How are all these people buying homes? It's getting unaffordable in Utah. Today, the interest rates are, if you wanted to buy the rate down, you'll see the closing costs on the right-hand side, roughly. This is for a $400,000 house purchase right now, or a $400,000 loan purchase. You could buy the rate down to all the way to 2.375 for a 30-year fixed mortgage on a conventional loan. I normally see around 2.625 to 2.75 because people don't want to pay a bunch of money to get that rate down. So right now, that's kind of what I'm seeing. So these home prices are sustainable because the rates are so low. Today, if you were to buy the median priced home at $375,000 with a 2.5% interest rate, with 5% down, oh, you know what? This slide is wrong. I put average tax and insurance included, but then I ended up changing my mind and I removed it. So $1,430 represents only the principal and interest at a 2.5 rate with 5% down. In 2016, if we could reverse time and you could buy a home then and wish you would have bought a home then, you'd have saved about $130 because you'd have put 5% down on $300,000 at a 4% rate, and that principal and interest is $13,060. So you should add around $200, $250 above those numbers to calculate into your principal or your property tax and your homeowner's insurance. But anyway, your actual borrowing power has decreased by about $130 over the last 4 years as home prices have gone up a solid $100,000 on average. So I'll conclude with, when you see interest rates go back to 4 and 5%, I do believe home prices would struggle to continue going up. They may level out, they may come down a tad, but I believe interest rates are the biggest indicator of when the housing market is going to crash. So interest rates, as we know, they are determined in a big way by the Federal Reserve rate. Not directly, but it has something to do with it. And so until the Federal Reserve starts raising their rates, you're not going to see mortgage rates significantly rising. And that's my opinion. And so that may take years because the economy really is struggling right now and relying on the government's help to keep inching it along. And until we get back on solid ground economically, I don't think mortgage rates will raise to reduce buying power significantly. So we will end on a little bit of stats that come from the US Census Bureau, and they believe by 2045, Utah County only is going to receive an extra 600,000 people. We will effectively double our population rate in the next 25 years. So if we're going to double our rate, I don't know, I don't believe the home prices are really going to tank. We only have about 240,000 acres left, mostly in the Eagle Mountain area on that side of the valley. In Salt Lake, there's only 65,000 acres left, and that's for residential, industrial, everything, commercial. So other places receive, Texas, an example, they receive way more people every year. Hundreds of thousands, I believe, every year are moving to Texas, but yet their home prices aren't skyrocketing like what we're seeing in Utah. So why is that? I believe it's because we have a very limited geography. We've got the mountains, and we've got the lake. There's very few places to continue to accept that growth that we're experiencing. And so you're going to be going farther away to seek affordability, or asking yourself, how do people afford to be in the middle? It's going to be more and more expensive, but it's just demand. You got other people that have been lucky enough to ride this real estate wave up, or the stock market's up for the last 20 years, and they have extra cash to buy down their homes. And so it'll be a pretty healthy, competitive market, I believe, in the long run, to be east of the freeway, in between the mountains, north and south, all the way up Salt Lake and Utah County. There's nowhere left to squeeze everybody in. So because of the limited geography, we have the highest growth rate in the nation, depending on the year, with very little land locally to put all the people. I believe our home prices are going to stay pretty strong in the long run. Now, I'm not opposed to the market taking a beating. Nobody thought it would last time either. The indicators and the data that we have don't seem like it's going to happen yet. So with that, I hope this information was really helpful, and hopefully you feel inspired or confident to be able to make a decision. There's a lot of strategy. For example, why I'm buying the house that I'm standing in right now is it's dated. It's under market value, because we can improve the look and feel of this home safely and have the after repair value be more than it costs to bring it up to speed. So follow my channel. I'm going to post a video about our journey with this home and how we felt safe in buying it in this environment, pre-elections, all of that. I do feel a little uncertain, I do. You can't take that away, but there's enough data making me feel good. I'm not buying a home at the top of the market. I'm buying something that we can build in some equity in. So follow that video and check out what we've done and why we did it. Thanks for watching.